is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great. Adam, yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Good afternoon, everyone. Basil Chapman sitting in for Tommy O'Brien. We're looking at the Dow. Oh, amazing. This is up 593 points. You've got a whole bunch of the healthcare in the Dow. You've even got CVEX, that is Chevron. Merck is moving up. Procter & Gamble, United Health. Big help. And what we're doing is we're looking at 47,959. The all-time high was on the 29th of October, just a couple of weeks ago, at 48,040. At this particular point, if we go above that using Chapman wave technique, if we go above that by 1 penny, 48,040.65 today or tomorrow, a whole bunch of things are going to happen. Number one is that I have to give this, I've been waiting for this. I don't want to go into it now. I'll do much more tomorrow in my show, The Tiger Technicians Hour at 10 o'clock Eastern Time, about the wave count and the Chapman wave count. But we're looking at no other way I could count this other than G/C. And I said, the 9-period moving average is over the 14-period moving average. Your pullback's like a spring-loaded move to the upside when it doesn't go pink, when it doesn't go negative under the 14. Where will it go to? Well, it ran up, and if it goes to 1 penny high above the 29th of October high, three things happen. One is I automatically get that leg D, right? It could even be a brand new A, but I get a D, and that from that moment on, we got the potential double top. You've seen how many double tops see quite a sharp pullback. Number one. That's number two is the weekly chart goes to that leg D. D is what you always anticipate in the Chapman wave buy mode, that it should go to at least 4 higher peaks. Peak A is the first, peak B, second peak C is the third, peak D is the fourth. We'll finally get that peak D. We could fail here even and get a peak C1, C2 in the daily chart, even in the weekly chart. But if it does that, right into this, you see this pink and green little mini channel? Every time it's got there, it's been repelled. I call it the Chapman wave inside track repellent propellant zone, right? And what happens is the monthly chart in a leg A from the low of April at 36,661, it remains in leg A all the way all through November. If we don't go above this 48,040 point, 56, I think I said 56, I should have typed it in, 64. If we don't go above it, that A becomes a peak A. But you go 1 penny above it, it extends. This is a floating ladder. It means that for November, you've got A. You can't make a peak until December, and you can't confirm it until January. This is amazing. So we're right on the cusp. Do we suddenly turn down here? I'd mentioned in the den that this particular pattern, the daily in a 10-minute chart, came very quickly from a peak. This is a 10-minute chart. Peak C to a D to an E and then an F. Very often you get a sudden pullback, not a major sell or anything, just a sudden pullback. And yet that 9-period, look how strong. Since this morning, this 9-period moving average has been unbelievable. Look at that. Cross positive at noon. And since then, anything above that has just been really positive. So we're watching this very closely. Okay, now let's get back to our story. So I wanted to do a couple of things here in this first segment. So here's the Dow. As I said, now it's even less than 100 points. It's 80-something points to an all-time high. Look at this. So you've got the Bitcoin, which had a fabulous session yesterday, pulling back again today, and I've been warning about this. I've been saying that double top at 127,240 on the 6th of October looks to me like and that was a leg D in the, remember, fourth highest peak D. That's where other things can happen. In the weekly chart, in the inside track repellent zone, I said, I think Bitcoin, even though we're long, we've taken nice profits. We've just got a little bit left just to keep a core position. I say, be careful. This looks to me like it's going to be choppy with lower highs and lower lows, and then we'll see if it can hold the 95,000 level. And that's kind of where I stand right now with Bitcoin. Let's just go look at the gold. Gold is trading off there really 4,398, round number high in the futures on the 20th of December. Plunges, and that was a plunge. That was like an Eiffel Tower move, straight up, straight down. And look at this. You come down to 39.01 on the 28th of October. Now you're having this bounce. So if gold can close above this high, the candle of the 23rd of October, above 41.71. Let's call it 41.75. If it can close above 41.75 for 2 out of 3 sessions this week, that says, you know what? That low could be a serious low, enough to have a bounce to try to tackle this really ugly candle of the 21st of October. The GDX is a little different. It has today made a higher high. This becomes a leg B. Look, here's your leg A. The 9-period moving average did cross positive. So far, this is very good action in gold. Look at that weekly chart. The 9-period moving average barely budged on the move down, and the monthly chart is still very good. That's the market vectors, gold minus. Look at silver. Silver SI trading right now. So we've kept a little bit of our gold position. We've taken very nice profits, but we've kept a core position, small core position, and it's, look at this, holding well. And silver, we had CDE core mining. We got in the 8s. It ran to 23.61. Pulls back to the 13s, and now it's trying to rally. I don't think it's that great. I don't think silver chart right now is acting very well, but core mining wasn't acting as well. So the continuous silver contract has gone almost to a 50% rally back from the high to this recent low. This is good action so far. I'm quite impressed. Up 66 at 50.98. Wanted to do a couple of other things here. Yeah, so crude oil is running today 87 cents. What's important to me is that CVX, that's Chevron, that's a nice bounce there, but it's still within a trading band, same as Exxon. So the multinational oils, Exxon, no, Exxon's much stronger. That was a brand new peak A, B. This is a leg C in the daily chart and a leg E in the monthly. This is very strong. Exxon's much stronger than Chevron. Very important to note. Okay, let me just quickly do TLT. Look, here's the TLT. Here's the 200-period moving average after what? A peak D, 92.19, retested at 92.18, double top, pulls back, trying to rally. So the TBT, which is the inversion of that whole thing, has a pullback, and it is at 33.2, so that's 3.32%. So the yields are in the higher range. Let's just put it that way. They're still remaining in the higher range. I'll be back in a few minutes. This is Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. The Dow is up 589. Very good.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Hi, folks. So we're just watching this real closely. Here's the 1 minute made a peak G. The 5 minute has this leg F, same as the 10 minute. What should happen next is a very interesting question. Why? Because, as I say, in the Dow, so let me just go through this. Usually this is the period where Tommy interviews me every week. We have this 3:15 interview. He's not able to make it today, so let me just go through where we are. So we are still long the Dow. We are long the Dow. We're long the three times long the Dow position. We have had shorts. We had shorts just on the way down there. We took a little bit of a gain, a little bit of a loss, just real tight stops because it seemed to me we weren't going to cascade lower. But I'm watching this very closely. Why? Because I wanted on, what is today? Today's Tuesday. I at the open yesterday, and I was away, but I was able to do my newsletter. I wanted to actually start another position long in the Dow, and I thought, it looks to me like there's a lot of resistance out there. Little did I know that you got Procter & Gamble, UNH, the Dow, Merck is moving up. The Dow, the stocks that are in the healthcare in the Dow are really helping a lot. Besides others that are moving, this is quite interesting. But we didn't. I would have added to. Instead, we added to Robinhood. We actually have Robinhood initially from 16. We still got that little position left, but we've taken profits in other parts of Robinhood, and then did nothing until yesterday. We did get in at 133. It's at 132 right now. I'm not sure this is the move that's going to start to go higher just yet. It needs a little bit more of a consolidation, but I did want to at least get a little bit back in there just to test it, to test the waters. That is, struggling a little bit. This is a very select move to the upside at this particular point. So we do also have, I like for subscribers to my opening call, I like to have a variety of price points that we are getting in at, the different positions, different sectors. And we're very fortunate we have one that is actually up 37% today. And I mentioned it on this show a number of times. In the interview, I mentioned Real. It's called the Real Company. And I said it's right in the sweet spot. The Real Inc., REAL is the symbol. Online resale of authentic luxury goods, buying and selling pre-owned designer items. And I didn't even dream that the monthly chart would get so close to what I'm looking at here in this cup formation. But it came out with earnings last night, and today it is up 30. We're in from about 8:30 back in early September, and here it is at 15.40, up 4.18. It did make a peak D in the inside track repellent zone. It did pull back, but look at this move up. We've taken some profits on the rallies, and here it is at 15.41. I didn't dream that the actual target that I had longer term was to test this candle right here. This is the candle at 17.09 of November of 2021. I mean, you're down here, and there's a monthly chart. You'd expect it takes a long time. So this says that by this month or even next month, the target of 1709 should be hit. But as I say, it's in the sweet spot. If you look at designer stuff, it's very popular. And so many shows are harkening back to the 1930s. And Newport is having a whole thing this winter of opening up the fantastic houses there for Christmas, different Christmas events. So it seems to me this still is in the sweet spot. It's a huge move up. I mean, yesterday it's trading in the 11s. Today it's at 15.40. That is a spectacular move. So I don't know if we'll take anything off right now, but we like to, on big rallies, we like to take something off. So I'm looking at this and I'm saying, as far as the market is, and we've had others that have done extremely well. We've lightened up on our General Electric down. We've got it still from the 198 level. We've lightened up on that. So we're just watching it, wanting to get back in on any very sharp pullback that comes in the next couple of weeks. We'll see what happens. REN has had a spectacular move. We're in from the 22s. It hit 76 double top just the other day. It's now at 56. So we're waiting to see if we're going to get back in. We did actually have a position yesterday for a very small loss just to see if it would hold. We'll wait to add to our position from way back. And the other is that I'm looking at so Symbiotic, this is a company that works with Walmart. It's end-to-end AI, robotic warehouse automation systems. Hit 84. We're in from 48. It hit 84, a round number. I always look at these round number highs, especially at a D. Remember, I always look at, if I get a parallel count, and there was an F/C, it says it could still go to D. When you get to that D, be careful. Well, we did get to peak D at 84 round number high. That was on November the 3rd, and it's making this dreaded H pattern, so it could come back a little bit. I could even see it hitting, testing the 62 to 60 area, and then I think it might be getting ready for another move up. We'll see about that. Okay, so within the Microsoft, we've had Microsoft from 338, taken profits in different places and then done nothing for a while. Watched it go to 553.72, a double top from the 555.45 area back in, when was that? It was August the 1st, week of the 1st, and it's pulled back pretty sharply. So when I see round numbers at highs, I always say, just be careful. What it made a 550 round number open on the 28th of October, hit 553.72, and look where it is. It went down to the 490s. Today it's trading at 508, attempting some kind of a turnaround. I don't think Microsoft really gets back on track until it's trading at 523 or higher. It does that, and that's going to be very important. So as I say, we raised cash because we knew that there'd be a choppy period in November. I suspect that choppy period is going to continue for a little while. But most importantly, within the context, so this is something there's a chance that we might switch from our Bank of America, which has been fantastic, going to the high. The target was the high from right there. So the target was, we've been long since 32 or so, and that really goes back quite a while. And our target was 50.11, the high of February of 2022. And lo and behold, it's done that, and it's still in a leg D. And my thinking was, either we're going to add to it on a pullback, or we're looking to some areas which are more contemporary, like I'm mentioning it out now loud, just so that you know my thinking. SoFi, I mean, the chart itself has done very well. Bank of America is obviously, it's been around a long time. I mean, it's changed its name a few times, but it's been around a long time. But SoFi is more contemporary in that it has online banking, financial solutions. It also has student loans. But this chart says to me, thinking of it as moving into an area that maybe Bank of America is a little bit still fuddy-duddy, still not quite there. And maybe, so it doesn't have to be SoFi Technologies, but I am thinking either we'll trade out and move into one of these companies, or we will just add that. But that's what I'm looking at. The IYH, look at this. The IYH is the iShares Healthcare. Look at this. Trading at 63.32, up $1.35. It broke the March high of 62.94, and it looks like it's on its way towards the 66 all-time high. So that's healthcare. I think there are sectors here that are holding well. I'll be back with Tim Ward straight after this break. Basil Chapman sitting for Tommy O'Brien. Dow's at 560.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
folks, we're back. Basil Chapman sitting for Tommy O'Brien. I just want to show you before we go to Tim Orr, this is a peak F in the 10-minute chart of the E-mini, S&P E-mini. This is a very quick A to B to C to D to E to F in the 5-minute chart, and a peak G in the 1-minute chart, and 68 is going to be the key support to hold. Let's go to Tim Ord, and as we're going to Tim Ord, I'm going to say, hi, Tim. I have got your newsletter right up here, the Ord Oracle. How are you?
Good. Thanks for having me on again. And actually, talking to S&Ps, we can start there if you want.
Very good. So, folks, you see this right here, the Ord Oracle newsletter. That's Tim's newsletter. We'll talk about it a little bit more in a moment, but let's get to what he has to say about the S&P. Fire away,
All right.
Tim.
All right. Anyhow, this is the S&P's daily chart. Goes back to September. I want to point out a couple of things. I circled a couple of areas there. This is a daily chart, and I got a Bollinger Band on it. And if you get above the Bollinger Band, which is this basically blue area right here, the market's extended on a short-term basis. A lot of times you get a pullback, and we did get a pullback, actually a pretty deep pullback, all the way back down to this region here. But that was kind of a warning sign. Right now, I'm still long. I think we're going to hit actually a higher high. What I'm starting to look at here, well, we got trend readings. This shaded pink area I got right here and right here are times when the trend reading was above 1.20. And I kind of list them there, point them out where they happen at. Had a couple of here, too, in this region here. But anyhow, we got support between 674 and approximately 680, give or take. The reason why that support area, trend readings above 1.2 and higher, project panic, and panic only forms at lows. So in general, that's a support area. So we're still in a support area right now. I expect it to rally out, hit new highs in the coming weeks, probably going into Thanksgiving, which is a couple of weeks away, whatever. But on a bigger time frame, if you take this high right there to this low right there, this is a 61.8% retracement of the rally that started from there and went to there. And normally when a market retraces 61% or more of a previous advance, a lot of times you're going into a topping pattern. It may not be this pattern. This may not work this time around, but it's something to watch for. So when we hit a new high, the pattern could be forming what they call is a 3 drives to a top pattern. And what it is basically 3 higher highs, and off the second high, the market retraces 61.8% off the second high, and that's what this one did. So if we go up and hit a higher high, there's potential we could do a 3 drives to a top pattern. And 3 drives to a top pattern predict the market will pull back down to the first where the pattern began, and the pattern began approximately around 654 area on the SPY. So it would, where's my, there it is. Anyhow, it would go up to a higher high than, whoops, this whole thing went here, haywire here, hang on. Oh, this is, let me get this back where it should be. Kind of having a, anyhow, what happened would go back to this low right here, and that's a possibility. So that's something to watch for. And to kind of support that idea, here's another chart on the monthly time frame. And anyhow, what you want to have as the market's rallying, this is a monthly SPY, is basically higher highs as the market's making higher highs. You want higher volume on each high. And in October, which is this one right here, obviously we did go up, hit a new high, and went on higher volume. That's a bullish confirmation to the upside. We're in November now. Obviously, we're not even halfway over yet. And so on this current rally, you want to have a higher high on higher volume. If you have a higher high and the volume's lighter, that reinforces the idea of 3 drives to a top pattern that we talked about on the first chart. So November, what I'm saying, is a very important month. It has to keep rallying higher and higher volume to keep the uptrend intact. If it doesn't, then we could be possibly going into a topping pattern. And here's an example. Hang on 1 second here. There's an example right there. This is back at the February high. That volume is actually a little bit lower than the January volume. And that's the reason why we got the decline going into the October low, because you hit a higher high on lighter volume. That takes the energy out of the market, and you get to pull back down to an April low. So that's what may happen here. It hasn't happened yet. We haven't hit a new high yet, but most likely we will in the coming days, if not weeks. And if we hit that higher high and volume for the month of November falls below the volume that we had in October, and then the whole thing could be setting up for a top of some sort. The market's been up double digits 3 years in a row. Well, I'm counting this year so far as a double. We're up around 14%, give or take. And so if we end up double digits 3 years in a row, a lot of times the next year is a down year. So that's why I'm kind of bringing this up. It's too soon to say if we're topping or not. But before the year's out, either November or December will tell the story, as if the market keeps making higher highs and higher volume, that will be bullish for 2026. But I don't think that's what's going to happen. So there's a possibility we could be topping in here, but that jury's still out. So is that clear, or is that too confusing? Do you have questions?
You've given us very specific, yes, levels to watch. I like that. That's very good, yes.
Okay, so the whole thing keys on volume. So it could be a 3 drives to top pattern, and for the monthly charts rally to new highs and lighter volume, that would reinforce the idea of a 3 drives to top pattern could be forming. So let's move on to the gold issues. We got more graphs of gold issues. I pointed this chart out last time. Actually, the RSI. Where's my? Yeah,
I should just mention RSI stands for Relative Strength Index, yes.
Yeah, Relative Strength Index. Last Thursday it was coming in around 20 or so, and I was saying this is a buy area. The middle window is the GDX, or the Bullish Percent Index, Bullish Percent Index for the Gold Miners Index / GDX. It's on a weekly time frame. I use the RSI 10 period, not the 14 period. And when it gets to below minus 25, it got below 20 last week. All right. I'll hold. We'll finish this up on the way back. We've got a break
coming up, folks. Tomorrow we'll continue. When we return, this is Basil Chapman sitting in for Tommy O'Brien. The S&P is up 14. The Dow is up 543. A very strong session for the Dow. Not quite as strong as the S&P, but still pretty good. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi folks, Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show, and the Dow's at 564, S&P's up 16. We're on with Tim Ord. I'm going to ask Tim to continue. Tim, what chart would you like to look at now?
This is, we'll do the same one here. This is a bullish percent index for the gold miners index on a weekly time frame /GDX. I just want to point out we're on a buy signal. The reason why this RSI on this bullish percent index, gold miners index GDX ratio got below 25, got around 19 or so. Anyhow, it was a buy signal. So it's now popped up. And we'll kind of do it. You can see it here. This is GDX. Can't quite see it yet, but it looked like a three-gap play to the downside. What we're probably going to do is go back up to the previous high, which is around 85 area, give or take. That had really decent volume on that high, but that's probably where we're hiding. Are we going to get through that area? Here's a chart that says probably not. This is a monthly GDX chart going back to 2016, and marks the time. I got these blue circles right there, and again, we're currently right there. When you get 100% above the upper Bollinger Band on the monthly chart, that's when the open and close above the upper Bollinger Band. Normally you get consolidations, and we did that on that day right there. And you can't quite see it, but there's another day right there. We did it, and we did it on actually this day right here. We had the open close above the upper Bollinger Band. This is on a monthly time frame, so this is not like a short-term tool. Right. These last consolidations lasted for years. We don't think that's going to happen. This one it gave a top or sell signal in 2000 mid-20, and it pretty much stayed on a sell signal for the next 3 years. We don't think that's going to happen here because I think the character of the markets has changed. I think we're definitely in an uptrend. Much higher highs are going to be seen. But what's probably going to happen is we're going to rally up and test the October highs. And the October highs, I didn't write down that volume, but that was a huge volume day. It looks like about, 750 million shares, give or take, somewhere in there. It's close to 1 billion shares. We're not going to probably get through that high. So if you test the previous high on lighter volume, at least 10% lighter volume, that previous high is going to be resistance. So if you can't get above the previous high on higher volume, you're going to reverse and go back down to the previous low. Well, the previous low is this month. So then we test this month on a lighter volume. That would say it has support, and we'll probably flip sideways. So I think that's I think that's probably what's going to happen here. We're going to create a trading range somewhere around between 70 and 85. That was the previous low is around 70, a little bit below that actually, and the previous high is up around 85. So I think we're going to bounce sideways here for a spell. Maybe 3, 4, 5 months, don't know. But trading ranges are good because we already had the impulse wave here going up, and we're due for consolidation. You just can't keep going straight up. So we're going to consolidate, for several weeks, if not several months. I don't have a time frame, but we're long right now. If we test the previous high on a monthly chart, and we hit 85 range, which is the previous high on 10% lighter volume, I'm going to take my long position off. That's not mean I'm bearish on the market on the bigger time frames. I'm not. I just think there's a good chance for GDX to pull back down to around the 70 level. That's something I'm going to be watching for. So I think a trading range has started, and that's the reason why for that. On the bigger time frame, this is worth remembering. This is the bottom window is a NDX. Middle window is the monthly time frame is the XAU to NASDAQ NDX, and top window is the XAU. And so I did a ratio, did an RSI. This chart goes back to 82, it looks like. And it looked like it appears to be a 12-year cycle going on. And to identify the 12-year cycle, when this ratio is rising, that means, excuse me, my throat's getting dry. But when this ratio is rising, then XAU is outperforming NDX. When this ratio is declining, then NDX is outperforming the XAU. In 2024, which is the start of that 12-year cycle, the market took off to the upside. The gold issues took off to the upside and outperformed the NDX. And as long as it's RSI, I took RSI, we've seen this chart before, but this is initiation of an uptrend. And once the RSI gets way above 50, you got up around 70. That suggests this 12-year cycle has kicked in. And what that suggests is that gold stocks will outperform the NASDAQ stocks over the next 12 years. We don't have a lot of examples here because we didn't have enough information going back the last 50 years, but we went back to 82, and I think this cycle is probably going to play out because there's a lot of gold stocks on monthly time frames that gave buy signals, and once a monthly to give a buy signal, it's usually at least a multi-month, if not multi-year buy signal. So a lot of these stocks are on multi-year buy signals. So, but on a bigger time frame, as long as this indicator RSI stays above 50, between 50 in general to 70 in general, gold stocks are going to outperform the NASDAQ stocks. So that's the reason why, getting back to this chart, that's the reason why I think this is just a sideways consolidation that may last, it's hard to say, several months, possibly first part of next year, before it starts off to the upside again. So this is not a top like these other two ones, 2020 or 2016. I think this is just a sideways consolidation. And a lot of these gold stocks, especially the small ones, I think are going to come to the forefront. And the big ones like Murak, Newmont Mining, AEM are going to consolidate over the next several weeks or several months. Then maybe later next year start going up again. But I think everything's going to, I think this is like 2000 again for the gold stocks. And so far, the information I'm getting, and this is one of the reasons why I think it's a 12-year cycle beginning, is because the RSI is the first time in the last 12 years they ever saw 70. So last time we seen 70 on the RSI is back in 2000. So it's a long time ago. So anyhow, gold stocks, I think, is where to be. I showed one gold stock or a couple of them last time.
Right. Yes.
Yeah. I like this one, Western Haven Gold Corp. The reason why I like this stock because he had a sign of strength.
This is on the Toronto Exchange, right?
Well, this one, the WTHVF. This is on the American Stock Exchange. So you can buy this. The symbol here is WT
HVF.
VF. It's on a monthly chart. So this is actually a monthly chart on the American Stock Exchange. And we had a sign of strength, which is a huge one. If you notice, that volume was just gigantic going through the mid-Bollinger Band, and that was your trigger to buy it. So this was on a buy signal. A lot of times, there's a chance we could possibly get back to the old highs, which is up around $1. 10 timers is a possibility.
That's amazing. This is a stock at 13 cents, and it actually hit 18.5 cents just the other day. Big percentage moves. Hey, Tim, thank you so much. The Oracle newsletter. This is Tim Ord. Muchly appreciated every week, Tuesday and Thursday. Thank you so much for being here, Tim.
All right. Thank you.
Thank you.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman sitting for Tommy O'Brien. This is the Tom O'Brien Show. The E-mini is up 21 at 68.77. So let me just show you this. You see this 9 period, this green line, this is the 10-minute chart right here. It's 1 minute, 5 minute, 10 minutes of the E-mini. Think of this as a daily, weekly, monthly chart at different time frames. So that pullback that we were looking at to see if there would be a test of the 69 level, well, there was, and now we've got a rally. What do we always look for? 4 higher peaks to peak D, where other things can happen. It could recycle higher, or it could see a pullback. Now you're seeing the pullback, and look what happened. We had the spike, and we had a spike right here. The 9-period moving average held beautifully as the price came down in the 10-minute chart. But there was still that spring-loaded move to the upside. That's what we've got to a new high at 68.80. And what are we looking at? We're looking at a bit of a pullback. But most importantly, look what we've got in the Dow. The Dow came within 47,974 is the high so far today. The high that we're looking at is 48,040. But if you look at the technicals, if the MACD, this moving average divergence, actually rallies over the red line, if it gets positive again, and the stochastic, which is only at 50%, can get over 80%, that's going to be very bullish. Right now, it looks like it's just the 914 that's very strong. So that says you haven't got everything in sync. So I'm going to be watching this very close. As I say, we still are long from the April low. The most recent longs in the 3 times long Dow and the diamonds themselves. But we have taken some profits off, and we've kept the core position because we think that this market is going to go higher. Meantime, back at the ranch, if we go 1 penny above the high of the 29th of October, that Dow is still in leg A in the monthly chart. That is incredible. Check out my opening call, my daily newsletter. As I say, we have a stock that had really good earnings. We got in the 8s and it's trading at 15.43, up 4.21, up 37% today. So we've got a mix of all price ranges. Have a great evening. And Tommy will be back tomorrow at 9 o'clock for the morning market kickoff.
Bill